Our next guest is on a mission to take the idea of employee ownership global. Here to explain and to discuss the private equity landscape is Pete Stavros. He is the co-head of global private equity at KKR. He could be the founder too if he'd like to be, which has $723 billion in assets under management, of which he oversees $222 billion to be exact. That's a lot of money. Pete's also the founder and chairman of Ownership Works. Good morning to you. So you've been trying to. You know what? Before I say anything, explain what this is all about for those who may not know.
Okay.
You've been talking about this publicly for quite a while, but I don't know if everybody is clocking what's happening.
Okay. And thanks for having me. Thanks for the opportunity. Employee ownership is an opportunity to give workers a chance to build wealth and to help companies address some of the problems that they face in the workforce, meaning, as we know, most employees in America don't like their jobs. 70% of employees are not engaged at work. The quit rate in America is out of control. It peaked recently at 40%. So we look at companies all the time where they are replacing their entire front line every 2 to 3 years. So an enormous waste. So employee ownership is an opportunity to help companies build stronger cultures, give employees a reason to stick around, be more engaged, and everybody can win. That's the high-level idea.
But what's the form? What's the form, and how much do you give away in the form of compensation? That is the fundamental question.
Yeah, so this is free and incremental to workers, so they don't invest out of pocket, and it's not a trade. It's not.
This is not restricted stock?
We've done it all sorts of ways.
Okay.
It can be restricted stock, it can be options. What we do is we put a block of ownership in a trust, effectively, and the employees participate through the trust. When we sell the company or take it public, that trust is liquidated, and workers either get cash or they get shares of tradable stocks. Let me just give you an example. Ingersoll Rand, a company that we took private years ago. When we took it private, there were 86 employees who had stock, only very senior executives. Culture was a mess, didn't even measure employee engagement, worker safety was a mess. It took 10 years. But everyone became an owner. So there's 20, Ingersoll Rand is public again. There's 20,000 employees with stock ownership. Workers made about $1 billion for themselves. And again, it took 10 years, but the quit rate went down 90%, and the engagement scores went from the 19th percentile.
How much did you have to give out to make that happen?
We're generally targeting a year's worth of income for employees if we hit our plan. It's not, while there's no risk to workers, it's not a guarantee.
When you say a year's worth of income, so
if you make $70,000, our goal is for you to earn $70,000 as a free and incremental benefit. That's the goal.
As an add-on?
As an add-on. Not a trade for wages, benefits. We're not taking away 401k and giving you this.
Okay, I'll make it more complicated. Same for senior management?
It's a better deal for workers because we don't put performance triggers on it. So senior management would typically be, like the CEO would have an equity award that's part time-based, just purely retentive, and part performance-based. Workers, we don't do that. It's because it's hard enough to communicate and educate everyone on all this. Many people have never owned stock before, so we make it very simple. Okay,
one of the things that's interesting, though, is because you're in the private equity business, there's effectively only one major liquidity event. You can't get out, unless you can get out earlier.
We get out, we're in together, we're out together. So they ride right alongside KKR. When we go public, if we pay a dividend on the shares, the workers get a dividend. If we go public and our investors get stock, the workers get stock. So Ingersoll Rand, when we took that public, all the workers got tradable shares.
So there is no secondary market for these shares? No. I mean, that's one of the things I think we're looking at now, especially in tech, for example, where you have a lot of these companies.
Yeah, where there's no secondary market. Yeah.
And do people look on some kind of computer screen somewhere and see, I own X number of shares and this is the current valuation, and who is determining that valuation as this is all happening?
So it's the same valuation we're using at our board level for our third-party investors, and we do quarterly all-owner meetings. So all the employees get together around the world, and we do a video meeting where we're talking about what's working, what's not working. They have our financials, so we're very transparent about how the company's doing. We're updating the valuation every quarter, and so yes, everyone can track how we're all doing.
This works when you own the company outright. In a club deal, meaning where you and maybe 2 other firms own a company, does it work in the same way?
It would work in the same way. Yeah, we rarely do that anymore.
Okay.
We're not,
I know the club deals went out of favor a long time ago, but there's still some where there's a bunch of folks invested in the same company.
Yeah, but look, one of the things we're trying to get at Economists will often talk about how real wages have gone up since 1980 20%, and productivity's gone up 80%. And what everybody's missing is the stock market over that period of time went up 8,000%. So even if we had workers participating in productivity, we'd still have this massive problem. Until we get more people owning, there's really no way to...
And you're thinking mostly as a retention tool.
And an engagement tool. So sometimes people will say, why isn't everybody doing this? This seems so obvious. And the truth is, it's very hard. You know, it's not just you give people shares of stock and suddenly they're happy. You've got to teach them about how the business runs, how they contribute to performance. You got to be transparent with the financials and valuations. There's a lot to it.
You see this is perfect for you today. Share the wealth. It's in the journal opinion. Share the wealth. Don't redistribute it. Workers become wealthy thanks to 401k, stock ownership plans, and stock option grants.
That's great.
That's the way you do it, though. That they participate with. It doesn't have to be some zero-sum game where I don't think every billionaire stole the money out of people's mouths to become a billionaire. Didn't they create some of that?
So one of the ways people often talk about it is this is about pre-distribution. So before the wealth is created, giving people a stake. Before. That's the idea.
Why not do that?
Well, that's the goal. And our aspirations here are massive. So I don't think people really understand what we're trying to do. At KKR, we've done this with 80, it will soon be 100 companies. 250,000 frontline workers are going to have stock. We're already around 200,000. We and about 100 different organizations started a nonprofit that you mentioned, Ownership Works, which is trying to build a movement around this. And then the big swing here is policy. So we commission polling work. Everybody likes this idea. It is one of the few things Democrats and Republicans
And when you say
agree on.
policy, what would you like? You would like a government program that does what?
Well, there already is a government program. In 1974, very few people know about this. Congress created the ESOP. So the ESOP was a part of the ERISA Act, and it gave companies a tax incentive to share stock with workers. There was a big boom in ESOP formations in the 70s and 80s. It is not as popular today as I wish it were. We get about 200 new ESOPs a year. They're mostly small businesses. The median size is about 48 workers. Could we modernize that policy? And could we get, like Walmart used to have a massive ESOP. Cargill had a big ESOP. Could we bring that back? And if we either try that or maybe we do a blue sky idea on how to incentivize companies to share ownership with workers.